Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update for commodities. We're going to work our way through the dollar, yields, precious metals, and the commodities and ETFs that I follow. Don't forget tomorrow we've got a 7 a.m. Mountain Standard Time platinum question and answer session. And I'm going to give you my financial opinions as we go through this. So we're going to dive right in to the dollar and work our way through commodities. So we've got the dollar here, the DXY. Today we're flat, but overall we've been making a very strong move to the upside. It's been strong, relentless move. If we back out, I'm just going to try to see if we can see any other patterns here. From a larger, bigger picture view, I can see basically a broken downtrend here. And we've been working our way higher. There's a trend line up there as well. We're working our way higher. We've got a nice, good support line right underneath us. So yeah, the dollar's been moving up, and we were sideways today. The 2-year yield, slightly higher. We are getting a little bit of a wick at the top here. That generally means that if you go to a daily chart, that we came up and kind of bounced off the ceiling there and started heading lower. So we could see potentially a little bit of a short-term movement to the downside here if from that wick of bouncing off that resistance up there. Looks like we did that over here as well. The 10-year yield's already starting to get that wick as well. Could we head a little bit lower? That's yet to be seen, but we could see yields drop a little bit in the short term. The 10-year also dropping a little bit. So the long end of the curve is dropping. The short end is still going up, but it does look like we could head a little bit lower in yields. The TYX-TNX ratio is still inverting. That's why it's heading lower. So the short end of the curve is still increasing versus the back end of the curve. Generally, when you have problems is when the curve uninverts, and we're still inverting at this time. So if you were to back out, we are bouncing around here for a little bit. Overall, we broke the downtrend here, and it looks like we're coming back for maybe a return move or something like that in this. And that also works out just like the 2-year. Now, is this 2-year going to turn and head lower where precious metals take off and we get this recessionary type of movement? Or is this just going to rocket on up to the upside? I don't know what that's going to do. We're going to watch it together and see what happens. But what's the ramifications of this? Well, precious metals take off and this generally goes down in the curve, uninverts. It's fear in the market. If this keeps going up, we're going to see that yield curve invert still. And that's generally a headwind for precious metals. And it doesn't really mean it's a tailwind or a headwind for oil. But usually oil goes up when the yield curve inverts, generally speaking. And then we've got bond prices. They were up today. And they do look like they want to go higher here with this big bullish engulfing. So that looks good for bond prices on the 20-year right here or right now. It doesn't look too bad. Gold heading higher, up $7. We're back moving towards that support level at 1930-ish level, 1925. Silver having a killer day today. That does look like it wants to bottom and move on up. And then platinum basically flat today. They're all kind of moving sideways at this moment. And I think it highly depends on what yields are doing. If we get the yield curve to uninvert, I think all of precious metals are going to go up. So if there's a debt ceiling resolution, perhaps the yield curve comes back down from fears in the market. XAU to gold ratio, that ratio is moving sideways today. It looks like it gapped higher but came back down throughout the day. We are still underneath that long-term big trend line that we'd like to break out of. The CRB index is up today, 0.86%. It's still hanging in there, just going sideways at the moment. We've been grinding sideways in this ratio, or not ratio, in the CRB index. We've been grinding sideways since about June of 2022. We've just been moving sideways. We've got the CRB to S&P 500 slightly lower, down at that 0.618 Fibonacci retracement level. GDX slightly higher, not really too much to report on, but we're right on that support line going across here at the blue. And then GDXJ, we are slightly higher there, just moving sideways for today. And same with SILJ, moving sideways. And we are back within the pattern here of our longer term pattern. Crude oil up 1.34%. I think crude oil, man, yesterday we had a large selling pressure day. Kind of surprising, to be honest, especially with the inventory draws that we're seeing in the markets. So I do think that we are at a long-term bottom here. If we were to do this on a logarithmic, I don't want to do it because this went negative in price, but I do think we're at a long-term spot that we're trying to put in a bottom, and we'll eventually grind on up for a good long ways to the upside. Now, we could grind sideways for a while. Depends what the overall markets do, depends what the inventories look like. There's a lot going on across the markets right now, which makes it difficult to read. We've got copper going down, and yeah, it bounced pretty strong today. And we've also got yields just rocketing higher. And I don't know what is attributed to those, the debt ceiling scare, or is there a recessionary scare that's going to come right after that's resolved? Tough to say. But I can tell you this, the markets are tight, and I think inventories are going to get eaten up dramatically, putting upside pressure from the physical markets. Natural gas up 4.72%. It looks like we're starting to work our grind on down here, and then eventually we'll get a pop out of this basing pattern. We could even put in a large U-shaped bottom, whatever it looks like. But I do think natural gas is incredibly cheap for a sector or asset. XOP, yeah, you know me, still grinding sideways, even though oil and natural gas were up today. So we could see that the recessionary fears are greater in this market than what most people think. And maybe this has a little bit more grinding to do sideways before we head on higher. OIH also grinding sideways, even though oil and natural gas were higher. We've got Sprott Physical Uranium Trust up today. We still have a battle between the buyers and sellers all going on everywhere through here. And it does look like we are coming to hopefully a resolution soon, where this thing comes into this corner here and hopefully breaks to the upside. But we're still within the pattern, still grinding up. URNM is also within its pattern, still grinding all up into the corner here. And then we've got URNJ looking like it's trying to get a little bit of footing here, just basically moving sideways. I think this is a cheap price right where it's at. TAN up 0.23%. It's moving sideways. And man, these things are all just grinding sideways. And they've been grinding like right to the tip, a lot of these things. COPX up 2%. This copper's been a little bit strong. This still has a lot of downside momentum, guys. I'd be just waiting to see this thing base out before heading higher. Lithium up. That is a bullish engulfing pattern. We should see a little bit of a move to the upside. Let's see if we can break out of this pattern here. REMX also getting some upward pressure. This is a bullish piercing, so it gapped down. It opened up lower than the closing price of the one before and closed up above the 50th percentile mark on the candlestick before it, working its way on higher, and we'll see if we can break out of this pattern here. The S&P 500 looking strong in the short term. It is moving on up. One thing that I would be careful of is I think that this is eventually going to turn over. But we could go up before that happens, and we could put in basically a double top. And what we need to see here in this double topping pattern is no one knows the exact level this is going to get to. What I would say is a lot of the times what happens is it pulls on down, you get a counter trend move, and you get like this double top. It could come here, it could come here, it could come all the way up. It can even go higher than this peak and peak up here if it wants to. And we could even peak, up here or something. So that is what is possible. We'll see what happens. The NASDAQ also looking like it wants to put in another kind of peak, double top, wherever this thing goes. But right now, in the short term, I think that's where it's going to head. And then we're going to put in a peak, and then it's going to roll over, and that's when commodities are going to go ballistic. EEM up 1.77%. It is still moving sideways. I think EEM, emerging markets, is going to do incredibly well when that dollar finally breaks to the downside, when it rolls over. We're not there yet. We're not there yet. XHB up 0.6%. There we are there. Very similar to the S&P 500 and the NASDAQ. MOO, slightly lower. I do think we have some room to the downside to still go to the lower 70s to do kind of a retest. Then I would get interested in it. Copper up 2.22%. Pretty strong reversal here. We'll see if that momentum can continue and if there's a lot of support in here because we've got lots of previous trading that has occurred in this area. And we are seeing that support today at 2.22%. So we've got lots of trading down in this region here that's going to act as support and to bounce off of. So that's what copper's doing, is it's bouncing off that support right now. Iron ore looking stronger. I think this looks good to go higher. We're seeing the bounce in some of the diversified mining companies with iron ore exposure, but I do think we'll eventually base out here and start to move on up with iron ore. Nickel trying to put in, it's a small little day-to-day, but this still looks like a lot of momentum to the downside. Aluminum up 1.37%. Not too bad. Not too bad there. It looks like we've got kind of a downtrend going here. And we have not broken that downtrend yet in the short term, but we're up against support right now. Baltic Dry Index getting hit to the downside. I do think this is going to work its way up after it basically flushes people out of the system, but it's broken out of this larger pattern to the upside. We've broken out. We're getting a little bit of a retest, it looks like, and then we'll move on up. Newcastle Coal still basing out above this breakout here. And we're probably coming back to somewhere in this area to base out in. Ethereum moving on up, looking quite strong today. Same with Bitcoin moving on up. I do think that both of these are putting in inverted head and shoulders, a breakout and a move higher eventually. It's just going to grind its way on up. So that's the markets that I'm seeing today, guys. That's the overall markets. You know, when we get into these areas where things are kind of mixed, they're going up, they're going down. Some of the leading indicators are mixed. I just ride through it because I know in the bigger picture view that we're cheap. The ratios are moving in a favorable direction on the long term, not the short term, but the long term. And I just ride through it. And I focus my life on other areas than just staring at charts every single second, trying to predict the short term. I do think that we are in the beginning of this commodity bull market still. I think that it's tracking very closely like it did in the 2000s. What happens is you get this big surge of inflation in the beginning. Interest rates start to go up. There's a bunch of crap in the system that needs to get flushed out. You'll see the stock market and the technology market, NASDAQ, start to roll over. You'll see layoffs in technology. Money's going to start to be diverted and go towards housing and more so into commodities, energy, and stuff like that. You'll get a slowdown period, which we're in. This is known as the bear trap in commodities. It's known as the bull trap in NASDAQ and the overall stock market. So I think we're going to go up in the NASDAQ and stock market. It's known as the bull trap. And we are going to go down in commodities in the short term, which we've been doing, and that is known as the bear trap. That is where we are in the cycle. If I were to pull this up and I were to look at, we'll say stock bubble, just to show you guys the chart and where we are located in that chart. So this is the chart that I'm referring to. Let me move it on over so you guys can see the full chart here. This is the bear trap in commodities. This is your first takeoff. This is your first sell-off, and that's your bear trap. This is what we're in. We sold off in NASDAQ, and what we're doing is we're coming back up for the NASDAQ and S&P. This is your return to normal phase. So in some of the assets, we're in the return to normal phase here versus other assets, which is in the bear trap phase. So that is where we're at, and that's what I'm trying to describe to everyone of where we're at. This takes time. This is how fast the markets move, which is slow. It's very slow in relationship. So that first move, that first wave up, where we're coming back down, that started in 2020, and we're at 2023. So that's 3 years. I think that we still have a good, long move in the housing market in terms of selling new homes. And when you sell new homes, you get more inflation and you get a expansion of the credit supply. So that is all interconnected. These are all telling us where we are in this market cycle. We are at a bull trap for the S&P, and we're at the bear trap for commodities. And these guys are going to rotate. Money's going to flow from one sector to the other sector over time. It just takes time. All right, guys, we'll catch you tomorrow at the Platinum Question and Answer session at 7 a.m. if you're a member. Love to hear your guys' questions. See you there. We'll catch you later. This is Finding Value.